Thanks for tuning into this earnings conversation with Amit Chadha of LTTS. There are a bunch of headlines that you can draw out of this quarter's numbers. They have achieved the $1 billion annualized revenue run rate. So to my mind, that's not a headline because it was largely anticipated. It's been the fifth straight quarter for them of over 18% margins, and I would love to probe a bit about what's happening on that aspect. But more importantly, they have raised the guidance midway through the year in an environment which a lot of people would say is very volatile. So what gives them the confidence to do that? And how are they poised for the rest of the year? Arguably the next 12 to 18 months. Let's ask all of those questions to Amit Chadha. He joins in. Amit, great having you. Thanks for joining in. You must be a happy man.
Yes. So thank you so much, Neeraj. In fact, feeling very proud and thankful, if I may. A great team came together. If you remember, last year, about September, we said that we'll try to get to $1 billion run rate in Q2, Q3 of FY23. And we have achieved that, if I may, in Q2 at constant currency basis. So a proud moment, thankful to all the employees that have come together, and thankful to our stakeholders for having the confidence in us. So yes, a good moment for us.
Yeah. Now, the revenue numbers, maybe as they are slightly marginally ahead of what Bloomberg estimates were. My question is, what happened in the quarter in terms of client conversations and execution, and what gives you this? And I would want to understand the reasons behind this confidence to up the guidance in such a fashion that the higher end is now the lower end of the band.
Sure. So what's happened is this, right? There are three broad changes that we are seeing that are happening in the industry today, right? One, we are seeing an energy transition in the world, transitioning to electric vehicles, transitioning electric sources, electric energy sources. In Europe, there are factories being converted to oil-fired plants from gas-fired. There is transition to green energy as much as possible. So much so that we've actually launched our own EV charging station in our Baroda campus. It can charge up to 4 cars and 4 two-wheelers. And we launched the app yesterday for anybody who wants to come in and do it. It's on solar panels and alternative energy. And we are trying to stay off the grid if we can and generate as much as we can and store it in batteries and do it, right? So, but notwithstanding that, so number one is this whole energy transition that is creating some amount of opportunity, if you may. And I do believe that this energy transition will create opportunity, not just for us, but for others over the next, at least, I would say 18 to 24 months, right? So that's number one. Number two is that absenteeism in factories is a constant in US and Europe, and the number of workforce has come down. I mean, we all know that. But what that is again creating, because factories still have to run, output has to happen. You can't idle plants, you can't idle stations. So you are seeing more digital manufacturing opportunities cropping up, etc. And not just nice to have, but these are need to have, if I may. Right? The third thing that we're seeing happen is that there are localized supply chains that are becoming even stronger. So local storage, local manufacturing, etc. And that is creating newer plants, that is creating newer capex, and again, need to have more than nice to have. Having said that, there is a reality that the world has gone, last year was a nice to have. It was Diwali every day, if I may, right? It's gone from there to becoming a need to have. But these need to haves that I'm talking about, I believe are stuff that will help us sustain our growth momentum, our large deal engine, and we are seeing a healthy pipeline. Our pipeline is up as compared to year on year, as compared to sequentially quarter on quarter as well. And that gives us the confidence in the guidance that we have provided, as well as the go forward plans that we've got.
So, Amit, am I understanding this correctly? You're saying that the need to have is large enough for the growth momentum to continue, not just for the next couple of quarters, but for, let's say, the next 18 odd months. Would that be a good?
Yes, sir. I'm confirming that the need to have is large enough, addressable enough, for us all to play in and gain as we move forward.
So when the need to have changes to Diwali yet again, once this crisis is behind us, it means therefore that the growth run rate or the growth runway could be longer, because a lot of people are questioning about what could happen with the growth runways for both ERD and IT services. But the Diwali factor that you spoke about might ensure that the runway stays long.
Yes, see, one thing for sure that's happening, Neeraj, is that that revenue pools, profit pools, and therefore skills required, etc., are changing. Yeah. If I look at pre-COVID, from electric vehicles, my transportation revenue was less than 5%, right? But if I look today, the kind of wins I have had, most of the wins are in the electric vehicles, connected vehicles area, not just auto, but buses, trucks, all that. So that has changed, right? Electrification of the plant level has changed, right? Sustainability is a new bet that we have taken, right? This was not there. So as long as we are ready to stay agile and we are able to look ahead and see what's coming and therefore change, I believe that there is runway. Now, will winter come at some point? You know, we all saw COVID, we all went down. Nothing is recession proof, right? We've all seen that. So we'll see. But till then, you smile and carry on.
Yeah, of course. No, but this is good to know, Amit. Now, just a couple of quick updates. In the releases that I've read, there is a BMW deal that you guys have spoken about, which is multi-billion-dollar, and there is a large European mobility deal, which is what, $60 odd million, if I'm not wrong, with token. I've spoken about. Are these the same or are these two different things?
I would not correlate both of them. What I can share with you for sure is that there's been more than one deal in Europe that we have signed this quarter. In fact, Europe has done very well. Knock on wood, has done very well for us this quarter in terms of numbers. In fact, if I look at in constant currency, Europe has actually grown 5% for us.
Yeah, I just wonder though, one quick comment there. In a world which is looking, or in a region which is looking quite challenged, if you will, under the current circumstances, one would have anticipated that it is a quarter of maybe low-key negotiations, not enough logo wins, not enough deal wins, and here you are talking about what you're talking about. I mean, what's happening here? And can this kind of conversation, client wins, logo wins, client conversations sustain, Amit? What are you sensing in Europe and in US?
Sure. So if I look at it, I look at US, Europe, and Japan as our three key markets, right? And in that, there are segments that we saw, all 5 segments in these 3 markets, right? US for us truly is all 5 segments, right? Europe for us is narrower. We are in 3, we're doing some work on meaningfully in 3 segments of the 5 in Europe. Japan for us again is 3 of 5, right? Or 4 of 5, the way we are, meaningfully speaking. So there are, see, I had said this last quarter and I'm repeating it. I don't see sectors under stress. I see companies under stress. So companies and like I said, from Diwali, I'll go to from need to have, nice to have, I'll say free money is over. I mean, that's a reality. I do want to say that it is taking slightly longer, even though our deal wins total TCV, and the way we count it is net new more than $1 million. So net new more than $1 million TCV. The number has remained, the overall aggregate number in the quarter has remained similar to what it was last quarter and similar to what it was the previous quarter in 3 digits, right? But the color of that has slightly changed. I mean, it is taking slightly longer for us to have those conversions, right? And you're having to provide business justification for the need to have and support the clients as they go through their decision-making cycles. That's a reality. But again, like I said, what is key is to be agile and to be able to adapt in these situations.
Well, and I wish that you do both of these and more for your sake and the sake of the shareholders. Quick update on the operational front, Amit. Fifth straight quarter, I believe, of northwards of 18%. Is that the new normal? And rolled into that is another question. Attrition is now ceased to become a highlight conversation simply because it's being spoken about almost every quarter until it changes. We've seen a bit of a perk up there. Is that worrying still, or do you reckon we are kind of near peaks?
So one, right, is that on the margin front, look, we had said last year in September that we will try and stay in this, we'll try and get to the 18% band. We were not in 18% at that time. And then from there on, we've gotten to this 18% band. Our goal is to stay in that in the medium term.
Okay.
One. Second, we knew that all the increments are coming in July. So what we did was that we optimized. So we reduced non-billable headcount, moved them to billable projects, etc. We also improved utilization, and we took freshers, 500 freshers in the quarter. But because we didn't go all out and we did a lot of optimization, right? You see the net headcount has not gone up significantly. It's kind of flattish, right? And that's on purpose. By design, we had planned this, right? And in fact, we had been planning it for a couple of quarters because we wanted to make sure we didn't dip in margins. Of course, the currency helped. I won't deny that. But optimization has played a role. Enabling functions have played a role in coming across generously and helping the process. I compliment them on that. Now, quarter three onwards, you will have freshers coming in again. So another 500 odd freshers will come in this quarter. We are honoring all the letters that we've given.
Nice.
Right? We are staggering the joining like last year. So our joining doesn't happen in a big bang, everybody coming in the same quarter. We are a small company. So we stagger them and bring them on so that we can absorb them in operations, get them deployed, get them meaningful projects, trained, etc. We have a global engineering academy that takes care of that. Sure. So we've done that per plan, and that will continue. Now, in terms of attrition, that is one parameter, honestly, that I'm not proud of, right? But it's a reality, it's a new normal. But I do believe that quarter three onwards, you will start seeing attrition coming down slightly. We are running multiple initiatives within the organization to motivate people, to keep them together, to show them the purpose that they are here for more than anything else. And see, we are not a cash and carry immediate gratification business. We are a longer term business. We are a long-term player. Our parentage, L&T, is an 80-plus-year-old company. So we believe in stay and build. And that's what we are, builders, right? So we want to make sure that people believe in that dream as they come to us. And we are continuing to do various things in that area. We'll see if we can. But next quarter, you will see attrition coming down.
Great. My final question, really, because I understand you'll be strapped for time, is this collaboration with Qualcomm on the 5G front. A lot of conversation around what can happen in 5G. It's a reality in India. Everybody's talked about it, given timelines as well. I'm guessing the rest of the world too. Tell us a bit about it.
Sure. So our focus on 5G is towards developing use cases on how will 5G impact. See, 5G adoption of 5G and adoption of metaverse will only happen if there are real life use cases that can see improved reliability, improved efficiency, lower cost, more, so that broadly, right? And unless the benefits come out, it will not take off.
Yeah.
So what we're doing right now is that we're working with people like Qualcomm. We've also signed one agreement with NVIDIA earlier. We're working with Mavenir, others, to create these use cases, if I may, that can showcase as to what's happening. There's a part of L&T called L&T Smart World, and they focus on the Indian market, and they focus on L&T. And we've been working in conjunction with them. So they're leading in the Indian market context. We lead in the US and European, Japanese market context. But we're bringing together our forces to see if we can bring out more use cases, improve adoption, etc. We will talk about this when we come back to you next quarter. I'm hoping in January and in April or May, whenever we announce our next 2 quarter results, you will see a lot more coming out in these 2 areas.
So, I mean, just last, sorry, I just extend this by a minute more. 2 quarters ago, we spoke about something that you were contemplating on the metaverse front. Right now it's 5G. A lot of this is very baby nascent steps for something that could be big going ahead. Would that be a fair assessment?
Yes, 5G and metaverse are two areas that are in progress. So, work in progress right now, use cases being built, skill sets being fleshed out, and therefore trainings being provided, etc. I would say, if you ask me, it's very honestly to admit, of the 6 bets that we had taken, right? EACV, sustainability, and digital manufacturing seem to have fired, while 5G medtech is stuff that I think will take another couple, 3 quarters for us to fire.
But a great show this quarter, Amit Chadha. Thank you so much for talking to us, and all the best for doing this, and to you and family and the team LTTS. A very happy Diwali and a prosperous New Year.
Thank you so much, and same to you and your family and your viewers as well. Take care.
Thank you, Amit, and viewers. Thanks for tuning in.